What's up, guys? Welcome back to my channel. Have I got a special one for you today? Because we're going to be talking about HIMS and HERS and the recent earnings that have led to this stock absolutely jumping. Right now, this stock is trading up over 30% on the day. And I'm going to explain to you why the earnings were so good and why you're not too late. So just look at the rally on this stock today. It's jumped over 30%, taking the market cap from almost a $2 billion stock to almost a $3 billion stock. And the reason for this was the earnings were so strong, and particularly the guidance. The guidance is where this business absolutely destroyed for 2024 expectations. So moving over to the actual earnings report now, you can see that the revenue came in at 872 million, which accounted for a 65% year over year in 2023. Now, this is absolutely astronomical numbers and growth for a year that is particularly bad. The estimates were around the 871 million mark, but they managed to beat this just slightly. Now, if we look over at the net income, you can see that they delivered 1.2 million. Now, this business previously was an unprofitable business, but you see they've turned this around at the end of 2023, actually producing adjusted EBITDA profitability of 20.6 million in Q4 2023 alone. So this business is starting to ramp up its profitability scale, which is fantastic. And another reason they're able to do this is next down to the next line, which is subscriber growth. Now, the subscribers grew to 1.5 million, a 48% year over year. I don't think people can quite comprehend how good that is. That number offers so much leverage going into the future in terms of raising prices for HIMS and HERS and creating so much more profitability. And they mentioned this on the earnings call, being able to leverage the subscriber growth to ensure that you're going to be able to get a higher price and deliver greater profitability in the future is going to help with the valuation of HIMS and HERS going forward. Guidance now. Now, this is why the business and the stock is up 30% on the day, because the guidance is absolutely phenomenal. You can see that they provided Q1 full year 2024 guidance with full year 2024 revenue in the range of 1.17 billion. Now, we're going to come back to that number because I think the revenue number is estimated, I believe, was around 1 billion for Wall Street. But the adjusted EBITDA is something that is just mega for this stock. You can see they're targeting a range of 100 million to 120 million. For estimates, Wall Street had this at the high range of 75 million in terms of EBITDA. So they're almost expected to get close to 50% higher than what was originally estimated by the Wall Street. So you can see why this stock is jumping, because as soon as you put £100 million or £120 million EBITDA on the valuation of where it previously was, around the $2 billion mark, this company suddenly becomes very cheap going into 2025. So you can see that this business has huge potential. And I still think this stock is undervalued, and I will probably be picking up some shares tomorrow. I won't lie. Anyway, if we now look further down at some of the other outstanding comments that were made by HIMS and HERS CEO, you can see that they were very pleased with the outstanding results, which underscored the brand and the brand growing, which is something that I actually talked about in my previous video of HIMS and HERS, that they needed to grow this brand and market the products because the products are providing a personalized solution that can really drive revenue growth and also target a good customer for repeat purchases. You can see they've had great market share gains and they've been delivering in 2024, and that revenue and profitability coming through 2024 through different personalized and accessible treatments are their core specialities, which is just fantastic. The other thing that they mentioned was unique offerings to the tens of million subscribers over time. So they're going to plan to innovate and also develop a lot of the products that they can eventually target with their subscribers. And this is something that I think is going to really help. If they can get a fantastic active customer list built through the subscriber list of 1.5 million already, this company is going to be massive. It reminds me a little bit of a company called Elf Beauty, but I actually think this business has even more options in terms of some of the products that it can provide. And the other great thing about this business is the momentum. There's clearly strong momentum, and they've got a powerful strategy from their high marketing costs that allow them to drive growth and profitability in terms of the capital allocation and the framework position that the company is going into 2024 and beyond. So this is great. This means they're already ahead of what their initial expectations were going into 2025 revenue target. So this business is firing on all cylinders. Now, the other thing I noticed from the key different business metrics, which I thought were really interesting. Obviously, subscriber growth I mentioned already, but the other thing to mention was the average order value. Now, this is up from almost about 15 to 20% from 2022 numbers. You can see that it went from $87 to $103, and the net orders are up as well. So people are ordering more frequently, and also that actually the average order size and value is higher as well. So these two metrics going up in the right direction is only going to make the valuation and the stock price higher for Hims and Hers. I also like the breakdown from online revenue to wholesale revenue. While wholesale revenue is only a very small portion, you can see that they do plan on growing this, and this is almost up 50% in wholesale revenue. So hopefully this can start to contribute a little bit more. The only downside to the wholesale revenue is margins, and that's why I think online revenue is still so important. They currently targeting around 75 to 80% gross margins. I think for the fourth quarter, it was 83%, which is just insane, compared to 79% in the fourth quarter. So this business is extremely profitable, and it's down to that gross margins and the online revenue of a lightweight business model that makes this business so attractive, in my opinion. The only negative I could actually find in the particular earnings has to be around the shareholder value or shareholders diluted. So while these results were absolutely fantastic, if I can find here, so you can see that they obviously beat on EPS and diluted, which is great. Of the estimate, I think estimates are the same as this. The average shares outstanding did grow by almost, I think it's about 5% of the actual float, where, yeah, you can see the basic is at 211 and the diluted at 221 compared to 206 in terms of the previous year. So they are diluting heavily. But when you consider the growth of 65% and the profitability that's coming into play, I can personally deal with something like this because eventually they're going to be able to become so profitable, they'll be able to buy back shares at some point if they can't reinvest into the business anyway. Okay, so if you guys think you've missed a boat, I'm here to tell you that you definitely have not, because this business going forward is still very cheap. Even at a $3 or just under $3 billion valuation, if they deliver 100 million to 120 million going forward, you're only looking at around a 28 to 30 PE, depending on what they deliver. And while I think this is maybe a little bit higher in terms of PE range, if you think going forward and they can deliver 25% growth next year, which is what expected, and they can raise that profitability through leveraging their price and subscribers, this business still has fantastic potential. Now, if you want to see a full breakdown of Hims and Hers and some of the other treatments that they're potentially looking to expand into, check out this video in the corner here because I go into a full in-depth detail of why I think this business has a fantastic moat around it. I think the personalized solutions of this business give so much offering to what this business can do in the future. I also believe that this stock is something that needs to be on everyone's watch list because they keep delivering year out, quarter over quarter in terms of the earnings. They constantly beat, and they do this by building a really strong brand. Now, if you guys enjoyed this video, make sure to drop a like and subscribe if you haven't already, because I go into fantastic other businesses such as Beyond and other businesses that are really performing well right now. And I think you guys would get some great value by checking out some of those videos too, especially if you enjoyed this one on Hims and Hers. So I'll see you guys in the next one.